Good afternoon. I'd like to call the Finance, Audit, Tendering, and Administration Committee meeting on Thursday, December 11th here at 12 o'clock noon. We're on time and hopefully on budget here. We'll find out shortly. I'd like to welcome fellow councillors that are sitting in with us today, our Finance Committee meeting in advance of our Committee of the Whole meeting tomorrow at noon, hopefully, to present the audited financial statements that Michelle Burge will be taking us through here shortly of our meeting today. Councillor McCart's with us, Councillor McKinnon, staff, our Assistant Manager, Isaac, and Richard McEwen, Director of Community Services, and CAO. And online, I believe we have Councillor McCabe and also committee member, Deputy Mayor Yankoff, correct?
Yeah.
Okay. Assume everybody's there. Okay, in any event, we certainly have quorum here in the chamber. Call to order. Okay, we're good with that. And number 2, declaration of conflicts of interest. Are there none? Seeing none, thank you. Approval of agenda. Moved by Mayor Brown, seconded by Councillor Bernard. Thank you. Number 4 is approval of previous draft minutes, December 3rd, 2025. Moved by Mayor Brown, seconded by Councillor Bernard, thank you. And number 5 is business arising from those minutes. None, I'm not seeing any. Am I hearing any online? Councillor or Deputy Mayor Yankoff, if you're there. Okay, silence is golden. Okay. Number 6, discussions, reports. Presentation of our audited financial statements, and certainly appreciate our staff, our finance staff is challenged as they have been with resources and support. We're a little bit late for that reason in getting our audited financial statements, but nonetheless, we have Michelle Burge here to take us through the statement for today. And Michelle, if you would like to get started and present the statements, thank you.
Well, good afternoon, everyone. My name is Michelle Burge, and I'm one of the partners at MRSB, so it's my pleasure to be here again this afternoon to present the draft audited statements for the Water and Sewer Corporation, for the city, and the pension plans. I go through the financial statements and highlight some of the significant items. And at any time, please don't hesitate to stop me if there's a question that something is not clear. And thank you on behalf of the firm for the opportunity to be auditors again this year for the city. We'll start probably with the Charlottetown Water and Sewer Corporation. Maybe. Oh, look at that. Great. So we have 4 statements, but this will be the first one that we'll go through this afternoon. So this is the Charlottetown Water and Sewer Corporation. So this would be for the year ended March 31st, 2025. The first item I will refer you to is the page 2, which is identified as the Independent Auditor's Report. So this is where we provide our opinion on the audit we perform for the Charlottetown Water and Sewer Corporation. So the audit report is issued to the mayor and the members of council. So under the opinion, it says that we've audited the financial statements of the Charlottetown Water and Sewer Corporation, which comprise the statement of financial position at March 31st, 2025, and the statements of operations, changes in net debt and cash flow for the year then ended, and accompanying schedules and notes to the financial statements, including a summary of significant accounting policies. So in our opinion, the accompanying financial statements present fairly in all material respects the financial position of the Charlottetown Water and Sewer Corporation as at March 31st, 2025, and the results of its operations and its cash flows for the year then ended in accordance with the Canadian accounting standards for the public sector. So this is the same opinion that we have provided in previous years for the Charlottetown Water and Sewer Corporation. So this is what we call an unqualified audit opinion, and we do provide a clean audit opinion for the Charlottetown Water and Sewer Corporation. The remainder of the report would be the same as it has been in previous years as well. So then we'll start with the numbers for the Charlottetown Water and Sewer Corporation, which is on page 4, and it starts with the statement of financial position. So this is at March 31st, 2025, as I said, which is the fiscal year end for the corporation. And we also provide information for the previous year for March of 2024 as a comparison. So the first information is the financial assets of the corporation. So for 2025, they are $17.8 million. Last year, it was $19.6 million. And financial assets essentially mean that those are assets that are liquid, cash in your bank, or would be in your bank kind of soon after the end of the year. The significant kind of change and reduction from the previous year, well, one item that's up, as you can see, is cash, which is essentially kind of what's the operating accounts, the amounts in those accounts at the end of the year, up from $5 million to $6.5. The other significant change is due from related parties, so that's down from $11.8 million to $7.7 million. And those are amounts that are owing to the corporation from the city. And this is oftentimes that there is kind of funds advanced between the corporation and the city as may be needed in terms of cash flow purposes. So at the end of last year was $11.8 million between city capital and city revenue that had been borrowed for the corporation, but there has been some of that has been returned during the year. So leaving a balance still from the city of about $7.7 million that's owed to the corporation. And that's also what's helped in terms of the cash or what's in the bank account. The next information is then...
Michelle?
Oh, sorry, yes.
I'm just on note 8.
Yep.
That it refers to, page 14.
Yep.
So revenue fund went from 6.7 2024 to 2.5 in 2025.
Yes.
Just, again, clarification, is that money between city core and the utility? Like, I didn't understand what you...
Yeah,
explained.
so at times when there is cash flow needs in either one, whether
Right.
it's the utility or the city, there is money that is transferred between
and
the
forth.
various bank accounts. And just basing on kind of the timing of when the year end is, there may still be some outstanding balances between the city and the utility. So last year, it was a significantly higher number that the city had borrowed some funds from the utility corporation. Some of it has been repaid during this year, but there still is an overall total balance of about $7.7 million.
So we only get that because we have a cash flow situation.
Exactly, yes,
Right.
yes.
It's not
yes.
about loans or lines
No.
of credit, it's just
No,
cash.
this is just purely moving funds from one bank account to the other, and as I said, a timing of what might be outstanding between the corporation and the city at the end of the year.
Thank you.
So then the next information is the liabilities for the utility. So for 2025, the utility total liabilities are $39.5 million for 2025. And in 2024, that was $42.6 million. So they have gone down from the previous year. One of the significant items, as you can see, is the first line there, which is the accounts payable and accrued liabilities. So they're down from $3.9 million to $2.3 million this year. And a lot of it is, again, related to timing and what projects might be outstanding at the end of the year. So last year, there was over $2 million in holdbacks owing on various projects to various contractors. This year, that is only approximately $800,000. So it's a bit of a timing issue of just what projects are outstanding and what those bills might be outstanding. So last year, there was larger amounts for Garfield Street reconstruction, Passmore Street, as well as St. Peter's Road and Belvedere. So those were kind of larger amounts outstanding of holdbacks on those projects for suppliers. The other significant liability, which you can see, is the line identified as due to related party. And these represent the loans that are related to the utility. So that's down from $35.9 million last year to $34.4 million this year. So all the loans are in the name of the city of Charlottetown, and those are with various banks, whether it's RBC or CIBC or whoever it might be. But when the loans are taken out, there's always a portion that, or there sometimes is a portion that is related to the utility. And this is the amount that has been identified that is the utility share of those loans. As I said, the loan is in the name of the city, but the utility does take responsibility for making those payments, whatever those monthly obligations or quarterly obligations might be. So it's down from the previous year, from 35.9 to 34.4. There was one additional advance during the year of approximately $1 million of a new loan with RBC, and that portion was allocated, $10 million in total. $1 million of it was allocated to the utility. So that's partly why the number hasn't gone down a significant amount this year. So there was an additional $1 million borrowed, and then, of course, the regular repayments that were made during the year. So overall, the liabilities are down from 42.6 to 39.5, with obviously reducing some of those holdbacks outstanding from the prior year and reducing and making the regular payments on the loans that are the portion that is related to the utility. So you have financial assets this year of $17.8 million. There's liabilities of $39.5 million. So the difference is what's called net debt. So obviously, after considering all the resources you have to cover all that debt, there is still a net debt of $21.6 million, but that is down from $22.9 million the previous year, so that's a positive direction in terms of reducing the overall net debt for the utility. And then the last part of this statement is then the non-financial assets, so it includes the inventory of supplies. So at the plant, pollution control plant, and kind of other areas, there is some parts, materials, supplies that are obviously on hand, and that's about $2.9 million. And then the other significant non-financial asset would be the tangible capital assets. So this is all the major infrastructure for the Charlottetown Water and Sewer Corporation in terms of the treatment plant, sewer utility lines, all of those assets. And as you can see, they have increased from 137.9 last year to 140.3 million this year. So it's about $5.5 million of kind of capital projects that were undertaken during this particular fiscal year. The biggest ones being for the water system, about $3.9 million for Passmore Street, Seaview Drive, Belvedere, Garfield Street. And then there was also another $1.8 million spent on the primary digester roof rehab that was completed during the year. And then some equipment and vehicles, but those are two of the significant items. So overall, the tangible capital assets or infrastructure of the utility corporation has increased with those projects during the year. So your non-financial assets are $143 million for this year, and they were $140 million last year, again, with those new capital projects. So you have net debt of $21.6 million for the utility corporation, non-financial assets of $143 million, and those two numbers together is what is the accumulated surplus for the utility corporation now at $121.6 million. Up from $117 million the previous year, so that's an increase of about $3.8 million, but the majority of that does obviously relate to funding for those capital projects during the year, but still a positive result overall.
So, Mr. Chair, Michelle, just go to page 16, deferred revenue again.
Yep.
So it said the state's under the Canada Community Building Fund, which is the old gas tax,
yeah.
CCBF.
Yeah.
The corporation was allocated $nil 2024, $213,000 during the year from the city of Charlottetown and earned interest of $101,200 in 2024. Page 16. 16 on the digital copy. I'm on my own copy.
I can move there if you
That
want.
he emailed. We're on page 6. I know, you're on page 6 on what she's presenting, but I have her presentation from an email that Isaac sent us out. I'm looking at,
Yeah, he's just looking forward
I'm looking at
to
the
something
notes.
that matches.
I'm looking at the
yeah.
notes. The notes,
I just brought it up on the screen there.
yeah.
That's
So what I'd like, and I know Councillor Bernard has tried to track this as much as possible. For the fiscal year 2024 to 2025, can you extrapolate what came from CCBF to the Water and Wastewater Corporation? Are you?
So there was no allocation at all in 24, 25, and there was only 213,000 in 23, 24. So basically, though, there hasn't been really any expenditures in 24, 25, or very little, only about 81,000. So there's still $2.6 million that the utility corporation has of gas tax funds or CCBF funds that are to be carried forward. So that's been allocated, still to be spent by the utility corporation.
So where do I find that in this consolidated statement, or in the,
In this, so on note number 10, that 2.6 million is the CCBF or gas tax funds allocated and for the utility corporation.
okay,
Yeah.
okay. And the
Yeah.
year before it was 3.8 million, correct?
Yes.
Okay.
Well, at the beginning of the previous year, at the end of last year, it was about 2.6. Yeah.
So question. So the gas tax comes to the city of Charlottetown. We're saying there's 2.66 under water utility. Is that gas tax that we would have put towards water utility over the years that they never used?
Yes, yes.
So it's still the city's gas tax, not necessarily.
It still
water.
is, yeah, but for whatever reason, a portion of it was allocated to the Water and Sewer Corporation, I'm sure for certain specific projects, just hadn't been utilized before the end of the year. So there's 2.6 million for the Water and Sewer Corporation at the end of March.
Yeah, and that's accumulated over not 1 year, 2.
No, exactly, yeah. There was a couple of years, I know for sure, not in it was 22, 23, there was $1 million allocated.
Yeah, I remember that, yeah.
Yeah,
Okay. Thank you.
okay. So we'll go back to, so we're going on page 5, which is the statement of operations for the year ended March 31st, 2025 for the Charlottetown Water and Sewer Corporation. So this will provide the details of the revenues and expenditures for the corporation for the year and then the overall result for the year. So the first information is the revenues. So the budget for 2025 had revenues budgeted at $15,021,000. The actual revenues for 2025 were $15.5 million, so they're approximately $500,000 more than the budget. And the previous year, the revenues were $15.4 million. So between the two fiscal years, the revenues have increased approximately $100,000 in total. Obviously, the most significant revenue is the first line there in terms of the metered sales. So the budget was $12.4 million. The actual revenues were $12.79 million, and the previous year they were $12.4 million. So at the beginning of April 1st of 2024, there was an approved increase in the water and sewer rates, a 3% increase. So that obviously has increased the revenues for the utility corporation. As well, there was consumption increases throughout the fiscal year as well. So it's a combination of both of those items that have increased the revenues for the metered sales. So that's an increase of approximately $315,000 in total. Fire protection from the city of Charlottetown, that is a budgeted item every year, so that's $1.3 million in both years. The wastewater treatment fees are the amounts that come from the town of Stratford for the treatment of their waste. That's down a little bit from $543,000 to $491,000. And most of the other areas are fairly similar. There is some decreases, as you can see there, in terms of unmetered sales are going down, and that will continue to decrease, as obviously that is a goal to have those reduced. Services billed also down from $269,000 to $205,000. So those are just kind of smaller jobs that might be performed by the corporation staff. So as I said, overall, the revenues are, fairly consistent in total, up approximately $100,000. The next information then is the expenditures for the Water and Sewer Corporation. So the budget for 2025 was $15.5 million. The actual expenditures were $14.2 million, so under budget approximately $1.3 million. And the previous year, the expenditures for the corporation were $13.5 million. So those expenses have increased about $690,000 from the previous year. So the first item there, the amortization of tangible capital assets. So that's gone up from the previous year, again, because of the significant capital projects during the year, so that increases every year. The debt interest charges went up from $1.2 million to $1.36 million in 2025. So that's a combination of, in the previous year, there was an additional debt borrowing from RBC. It was about $4.6 million, close to the end of last year. So this would be a full year of that with additional interest. And then as well, there was an additional $1 million advance from RBC, and so there's additional interest costs on those. So that's a combination of those two loans and additional interest. Fiona expenses, just a small amount both years in terms of costs that in terms of kind of cleanup. 43,000 this year, 46,000 last year. Insurance and property taxes up slightly from 179,000 to 196,000. Office and committee expenses, those are up from down from 787,000 to 774,000. So this includes the committee stipends, bad debts, contract and consulting fees. So the items that are down is more in terms of consulting fees. So there was a number of kind of research project and studies completed last year that those costs would have been approximately $44,000. So that is the reason for overall those expenses going down. The next line, the repairs and maintenance. So the budget was $3.7 million. The actual expenditures were $3.1 million, so under budget there, but up from the previous year, which was $2.6 million, so an increase of approximately $600,000 from the previous year, approximately $535,000. So this category includes all repairs and maintenance, whether it's for equipment, infrastructure, buildings. So during the year, the equipment repairs did go up approximately $230,000, so just kind of replacing some older equipment. The infrastructure repairs and replacement is about $800,000 of that in both years. The one area that is also up as well, besides equipment and repairs, is building repairs, and those are also up approximately $200,000. So there was a three-phase power upgrade, which cost about $72,000, and there was some lift station pump replacements, which were about $60,000. So there was a couple extra kind of unusual or extra expenses there. Utility costs, so the budget was $1.4 million, and that is very close to the actual expense of $1.4, and up slightly from the $1,353,000 in the previous year. So that's power and fuel costs, which have increased. And then finally is the wages and benefits for all staff. So the budget was $4.7 million. The actual was $4.2 million. And the previous year it was $4.26 million. So the wages are down from the previous year. And that includes administration staff, pollution plant staff, and then the works and engineering staff. So there was some vacant positions in both the plant and kind of administration. So that's the reason that the wages are down from the previous year. And then, of course, why it's a little under budget as well as in terms of those vacancies. So overall, as I said, the budget for expenditures was $15.5 million. The actual expenditures were $14.2, so about $1.3 million under budget, and about $692,000 up from the previous year. So the overall result for the Water and Sewer Corporation is an operating surplus of this year of $1,292,000, where the previous year was showing an operating surplus of about $1.8 million. So as I said, revenues are pretty similar, pretty consistent. It's in terms of additional expenditures that is reducing that operating surplus from the previous year. And then there's other revenues and expenditures as well for the Water and Sewer Corporation. The first line there, the government transfers for capital, would be funding that has been available for those capital projects during the year. So about $1.4 million this year. The biggest portion of that is the Investing in Canada Infrastructure program, or ISIP. That's about $1.3 million this year for Eastern Gateway, lift station rehabs, and wastewater treatment plant improvements. And then as well, there would also be some gas tax funds that were used during the year, about $81,000. Then as well, the municipal capital expenditure grant for the corporation was about $589,000, $600,000 the previous year, and that is totally based on the capital projects during the year. So that's the portion that the province contributes 10% of the capital projects. The pension plan for the Water and Sewer Corporation, there is obviously still an existing plan with some staff on that. During the year, that's actually showing a positive number in terms of a revenue for the corporation because of positive investment returns on the pension assets for the year, where the previous year that was showing as a net cost to the corporation. So those other revenues and expenditures this year are about $2.5 million net revenue additional, and the previous year that was $4.1 million. The previous year did have additional government transfers for capital. There was more from gas tax that was used, and more from investing in Canada infrastructure. So overall, the annual surplus is a combination of the operating surplus and those other revenues. So this year at 3.8 million, and the previous year, we'll say round at 6 million. I do tend to have people more focus on the operating surplus line because that other revenues and expenditures are somewhat out of your control because it's based on how the pension might do and obviously how many projects of capital that you may have during the year in terms of what funding might come from those. But still a positive number in terms of operating surplus, about 1.29 million for the corporation for this year.
Mr. Chair, can I ask a question? Michelle, if we just go back up to, again, page 7, metered sales. Now, I know our audit is not a notice to reader, it's review and engage, correct? Are you full
It's an
audit?
audit, yeah,
It's full audit.
yes.
So with all the development going on residentially and non-residentially, you'd think our meter sales would be up because of more customers.
And that would be a combination as well. So it's a combination of increase in units. There was an increase in the rates early in April of the fiscal year. And then, as I said, there was an increase in consumption, which that would also probably tie into additional units during the year.
Okay, so that's why we budgeted 12.4, it came in at 12.7. But you don't have the numbers that show the number of new meter customers. You don't go that.
I would have that, yes. I just don't have it at my fingertips, but I certainly would have it.
Okay, so
Yep.
we could
Yep.
get that,
Yep.
okay.
Yep,
Okay, no, looks good, thank you very much.
okay.
You have to put your mic on.
I think in 2023, that was around 11.7 for the water revenue. And it came in 12.4.
Okay.
Yeah.
I'm just going to skip over a couple pages here and just kind of do a couple final things here for the Water and Sewer Corporation. So we'll go to, so we've gone on page number 14. We did go over the deferred revenue, which, as I said, is mostly Canada Community Building Fund or gas tax funds. So there's about 2.6 million that has been allocated to the corporation. The note number 11 is the due to related party, and as I said, the following amounts are loans that are held by the City of Charlottetown for which a portion has been allocated to the Water and Sewer Corporation. The City of Charlottetown is responsible for all payments on these loans, but the payment is recovered from the Water and Sewer Corporation. So there's a number of loans that are identified here, as you can see. The one that has increased is the third one, the Royal Bank of Canada, went up from 4.5 million to 5.6, so there was a little over 1.1 million additional advance during the year. All the other loans, as you can see, are decreasing, have decreased, and those are making the regular payments. So the total at the end of March of 2025 is 34.4 million, and last year was 35.9 million. In the next year, based on those loans and the terms, what will be paid down will be about 2.3, almost 2.4 million. And that number, as you can see, increases over the next 5 years, obviously as more is getting paid on principal and less in interest. And you can see thereafter is 21.7 million because most of the loans would be a extended period of time, whether 20 years or longer for some loans. So nothing that obviously is a short-term loan. The other item I'll refer you to here is on page 17, note 17, in terms of breaking down the total accumulated surplus. So in total, the surplus for the Water and Sewer Corporation is 121.6 million, and had noted that had increased from 117.8 the previous year. So that was an increase of the 3.8 million. And a breakdown in terms of obviously the significant portion of that surplus is the line identified as investment in tangible capital assets of 105.8 million. So of your surplus, you've already used the significant portion of that and invested that already in your various infrastructure for the Water and Sewer Corporation. And what will happen over time is that number will be reduced by amortization, basically recognizing that over time, that infrastructure will have to be replaced and updated.
Can you repeat that again, sorry?
Yep, sure. So of the total accumulated surplus, 105.8 million is identified as the line called investment in tangible capital assets. And that essentially means that the Water and Sewer Corporation has already spent those funds. It's invested in the infrastructure, whether it's the treatment
Okay.
plant or water sewer. So you've already spent it, and
Right.
what's going to happen is it will reduce over time with depreciation.
Okay.
So really, the accumulated surplus or unrestricted amount that, is accessible is about 15 million, 15.6 million in both years. So
Right.
as you can see, the number has remained fairly consistent. So that is kind of the overall surplus for the Water and Sewer Corporation that is available.
Just a clarification for my own understanding. So, globally, big picture, water and sewer assets, this investment in tangible assets, 105 million. For instance, our treatment plant on Riverside Drive would represent a part of that, correct?
Correct, yes.
Right.
Yes, yeah. The last item I'm going to refer you to here is on page 19, which is the tangible capital assets. So it's a schedule about kind of what is the major infrastructure that the Water and Sewer Corporation has. So it's land improvement, water, sewer, and treatment plant, buildings, equipment, vehicles. So at the beginning of the year, the cost of all those assets was $196 million. So that's what the outlays or cost for all of those various capitals. During the years I mentioned, the additions are 5.4 million. As you can see, the water, sewer, and treatment plant, water systems were about 3.8 million. Buildings, about 1.8 million, which was, as I mentioned, the roof rehab, some equipment and vehicles. So about 5.4 million was spent in total. And now the total cost of all the Water and Sewer Corporation assets is 201.4 million. So that's the total investment. And over time, there's been amortization this year, about $3 million. So the accumulated amortization is 61 million, and the net book value now is 140 million, but you have also borrowed against that, which is about the 35 million. So that is what the net difference is at investment. So over time, as I said, you're reducing your assets by amortization and obviously then repaying some of that debt that's associated with it. And right below that is then for the previous year, you can see that there was 7.4 million of capital project spending for the Water and Sewer Corporation, and that was what was bringing the total cost up to 196 million. So those are the Water and Sewer Corporation draft statements.
Chair. Michelle, if I go back to page 6, I'm just wondering, this is a clarification. You had the net debt at 21,700,000, but then you go to your loans and you have it at
34.4.
34 million.
Yeah. So basically.
Just a clarification,
yeah,
just so
yep.
if,
So basically on this page here, on page 4,
yeah,
you have a net debt of 21.6 million, of which includes 34 million of loans, but you also have money in your bank. You have money that's coming to you in terms of receivables. So what you have is accessible, about 17 million of assets to be applied against all of your debts.
Right.
And that's what the net debt would be, considering, what's in your bank accounts or what money is to be collected.
So last year, we got caught up with the depreciation of our assets, and we had to account for that. Now, in private business, that accounting can be used as a tax deduction, but in a public organization or a level of government, that's not the same case. So where do I find the depreciative value of our assets and what it cost is compared to what we budgeted? Would that be under?
So, we can try this one.
Because I think with depreciation of assets, there are ranges.
Yeah,
Yeah,
we
you don't have to go the full range as long as you stay within the ranges that
well,
are.
there is set rates each year for, depending on what type of asset it is.
Right.
A computer is probably 3 years, because it's not going to last. The plant and other major assets are obviously going to be significantly longer periods of time. So it's going to vary depending on the asset, but they're fixed every year based on those rates, and we see them right here. So it's 2.5% for a building,
Right.
20% for equipment, and then the waste like the water, sewer, and treatment plant is 2%. So that's obviously a longer period of time.
Right.
So those are fixed. Those don't change every year. But what changes is if you've done more work, more capital projects, you're going to have more amortization because there's more costs to amortize.
Right. But where do you account for it in the statements for the audit? I just
So
wanna-
on this page here, which is page 5.
Yes?
So the amortization of tangible capital assets this year, the budget was 3.1 million, and the actual was 3,083,000. So you're very, very close to what you had budgeted. So that was a good budgeting process. But it's up from last year because, as I said, you did have 5.4 million additional assets to start to amortize those during the year. Now, I know you made a comment about, obviously, businesses, a private business also amortizes. So you're no different than that. And in terms of how generally we look at it, that number usually is pretty close to what the principal repayment is. And in your case, as I said, you did repay, about $2.6 million during the year. So that principal and that amortization is, very close to that number. And that's still a cash flow in some respects because obviously that's to make sure that you have the cash flow to make those payments during the year.
And, Mr. Chair, just last comment. Page 15 on our pension, accrued pension asset. So it's fully funded,
Yes,
in very good position,
yes,
and I believe our pension is a defined pension,
yes.
which is also, is it CPI adjusted? Is that something you can, or,
Yeah, the pension payments are adjusted by inflation every year for those that are in that realm of having payments. But the numbers reflecting here are for all staff in terms of all that are still actively and working, and those are obviously now in retirement and obviously collecting benefit plans.
Okay.
But yes, there is an increase for inflation for payments and benefits each year.
thank you.
Any other questions on water and sewer? Okay. So if it's okay, we'll move on to the City of Charlottetown. And as you can see, this statement is identified as called the Consolidated Financial Statement for the City of Charlottetown. So just as a bit of a recap and refresh of what that means, so the consolidated financial statements for the City of Charlottetown obviously include the city. It will include the Water and Sewer Corporation, the numbers that we just saw. It will include Carey, because the city is a major control of that in terms of appointing directors and obviously being responsible for deficits and capital for the majority of that. And we'll also include 80% of the Civic Center because, again, of that relationship and your ability to appoint directors and obviously relating to the operations. And there will also be, of course, the Tourism Accommodation Levy, the SURF, and a few other like Planning Board and those other organizations that are kind of a part of the accountability structure of the city. So when we talk about the City of Charlottetown Consolidated, it is a number of other entities that are included in these financial statements as well. But as I'm going through, I'll clarify that as well. But just wanted to refresh everybody from the start. In terms of starting with these financial statements, again, please don't hesitate to stop me if there's a question at any time. So the first item, again, is the independent auditor's report where we provide our opinion for the audit, again, issued to the mayor and members of council. So under the opinion, it says that we've audited the consolidated financial statements of the City of Charlottetown, which comprise the consolidated statement of financial position at March 31st, 2025, and the consolidated statements of operations, changes in net debt and cash flows for the year that ended, and accompanying schedules and notes to the financial statements, including a summary of significant accounting policies. So in our opinion, the accompanying consolidated financial statements present fairly in all material respects the financial position of the City of Charlottetown as at March 31st, 2025, and the results of its operations and its cash flows for the year then ended in accordance with the Canadian accounting standards for the public sector. So again, exact same report as we issued for the Water and Sewer Corporation, providing an unqualified audit opinion and a clean bill of health on the audit again this year for the city. The remainder of the report would be, again, exactly the same as in previous years as well. So then we'll start with the numbers for the consolidated financial statements for the City of Charlottetown on page 4. So this is the consolidated statement of financial position. So again, at March 31st, 2025, and compared to the previous year of March 31st, 2024. So again, the first items are the financial assets. Again, those are assets that are, as I said, liquid, will be, in your bank account or would be soon after the end of the year. So for 2025, the total of financial assets is 24.8 million. Last year, it was 44.6 million, so there's a decrease there of almost about 20 million. The number we can see is the very first line, it's cash, or what's kind of in the various bank accounts, again, on a consolidated basis between the city, water and sewer, and, the other entities. So last year, that was a total of 15.6 million. This year, we'll see in a second, but it's an overall net bank indebtedness of about $6 million. So there's been about a $21 million change there. And the reason for that is at the end of last year, there was a new RBC loan. It was over 46 million, and there was a significant amount of that still unspent before the end of last year. Obviously borrowed the amount that was needed for upcoming projects, sat in kind of a bank account at the end of the year, and then, of course, now has been used during this year, as well as some borrowing on some line of credit.
That would basically, Michelle, our line of credit.
Yes,
that we would-
yes,
yeah.
exactly, yeah. And I know there's been another loan that has now been advanced since this fiscal year, so that will tidy up those lines of credits, but will be a new loan. So that's one of the significant changes this year in terms of those financial assets, is kind of that change in terms of having money last year just from borrowing early or in advance, and then using that during this year. There's also accounts receivable, which are about 5.9 million, which would be a combination of what we just saw on water and sewer in terms of sewer billings. And then, of course, amounts outstanding for HST, as well as other amounts outstanding for trade receivables. And government funding receivable of about 10 million compared to 12.9 million last year. The line called the investment in government business enterprise is 2.2 million this year. It was 2 million last year. And that represents, because you are an owner of CADC, you are 15% owner of that. And every year we reflect your share, the 15% of the profits for the year. As you can see, that did go up approximately 160,000 this year, and that's your 15% share of that profit. The accrued pension asset is basically the water and sewer pension is to a positive for this year. And then the last kind of significant item in financial assets is the loans receivable, and this is all relating to the switch loans. So those are loans that have been issued to residents that did qualify and apply. So those are down from 6.8 million last year to 6.2 million this year. So it's at the end of the program, so there's about 862,000 was kind of the final advances to residents during the year, and 1.4 million was repayments from residents during the year. So about 6.2 million outstanding at the end of March.
So, Michelle, the 6.8 was what was given out to the switch program, and 6.2 was what's left owing?
That's what's now remaining at the end of March, yeah. Yeah.
Okay.
And that is continuing to go down every month with obviously repayments.
Just the repayment
Yes,
schedule, yeah.
yeah. There's 0% interest on those, so it's just whatever the payments are is reducing that balance.
Yeah.
So as I said, the financial assets are down from 44 million last year to 24 million this year. With that kind of change in that cash or bank balance is a significant change there. So under the liabilities, then we see that there is a bank indebtedness overall for this year of 5.9 million. So that's money in various accounts, but also with RBC drawing on the line of credit, which was about 21 million at the end of the year, and then obviously only about 15 million kind of in the various bank accounts. The accounts payable were 25.3 million this year, and they were 33.5 million last year, again on a consolidated basis. So these would represent, obviously, between water, sewer, the city, and then all of the various entities. Again, the significant change would be in terms of capital-related projects and what was outstanding at the end of last year. So last year was a pretty significant amounts outstanding in terms of kind of holdbacks and amounts outstanding. Last year, there were about 5.2 million, a lot of that to do with Simmons. And then this year, obviously, less than 1.5 million. So that's one of the significant changes there in terms of accounts payable and those amounts outstanding. Then we have the deferred revenue, so that's 10.4 million this year. It was 9.4 million last year. The biggest two portions of that is the Housing Accelerator Fund from CMHC, about $5 million that you have at the end of March to carry forward into this year. And then, of course, your Canada Community Building Fund or gas tax funds, which is about 2.6 million. And then some additional funds in terms of Kerry and Eastlink obviously have some deferred revenue as well. And then also the SURF, or the Tourism Accommodation Levy, also has funds to carry forward of about $1 million. The sick leave and post-employment benefits are about 7.4 million. So for all city employees that are entitled to have a number of sick days per month, and also based on years of service, we'll have a post-employment kind of retirement amount. That obligation now is about 7.4 million, an increase from 7 million last year, and that's just another year's service, essentially, for the staff and what they're entitled to for, another year of getting closer to retirement, or another year of maybe not having used all their sick leave entitlements. And then the last kind of significant item in liabilities is the long-term debt. So now a total of 131.2 million is the debt between the water and sewer and the city, and that is up from the 127 million in the previous year. So during this year, as I mentioned, there was an additional $8.2 million loan from RBC, and there's also a new $1.6 million loan from the Federation of Canadian Municipalities for energy upgrades. So almost about a little over $10 million is additional loans during the year. So that's the reason that long-term debt has gone up. Yeah.
Michelle, so the 131 million is you're saying it's water and utility and city?
Yes. Yes.
So how come water utility is in that load when they have their own?
All the loans are in the name of the city of Charlottetown. On the previous statement, we were calling it due to related party, not actually loans, because, yeah, this is a consolidated statement with all of the debt between the water and sewer and the city. So it would be the two of them combined together, but it is, all the loans are in the name of the city. They're ultimately responsible, although there's a portion that the Water and Sewer Corporation does take responsibility for their share of any payments.
Okay, because we have our debt in the water and sewer consolidated statements. We just seen they would have the debt load under water and utility. So, okay.
So this is a
has that
consolidated
included in
for
that
the
number
two of them.
too? Okay.
Yes, yes.
So,
Thanks.
so to Councillor Bernard's clarifications, would we say so the long-term debt, 131 million two is consolidated, and then the water, and we just left water and sewer, but the water and sewer's portion of that again would be,
It's about 34 million. 34?
right,
No, but the loans are 34 million for the water and sewer utility. So basically that net difference is a little, 98, 99 million is kind of the city portion. Yeah.
Could I just follow up on that? So, Michelle, there is under the, I don't know if it's a financial act or it's under the Municipalities Act. Where
Municipality Act.
it is under the municipality. So our debt to our total assessed value, I think our total assessed value is at I'd have to look at the first part of our statement. Would it be 1 billion, or is it more? No, it's more than,
It's more than $1 billion, I think, yeah.
what's the
Yeah,
total?
so basically, under the Municipal Government Act, you are allowed to borrow up to
12%?
yes, 12% of the total assessed value of properties within the city.
Right, and we're well within that.
Yes.
Like we're maybe 5%?
Yeah, I didn't do the calculation,
But
but
it-
yeah, it's
Could
well
you-
within that.
Could you just do that
Yeah.
and as follow-up? Thank you.
Yeah. So the total liabilities of the city on a consolidated basis is 180.5 million this year, and it was 177.2 million last year. So that's, again, increased because of short-term kind of line of credit borrowing and additional loans during the year. So you have financial assets of 24.8 million. You have liabilities of 180.5 million. So the net debt on a consolidated basis for the city is 155.6 million, up from 132.6 million last year. So again, additional borrowings on line of credit and additional loans during the year. So that has increased the net debt on a consolidated basis. The last part of the statement then is the non-financial assets, the biggest portion of that being the tangible capital assets at now 409.1 million, up from 372 million last year. So the city had capital projects of approximately 67 million in total, where we just saw on the water and sewer utility also had about 5 million, so over 70 million dollars in terms of additional infrastructure added in terms of tangible capital assets for the year. Obviously, the reason for the significant increase there. And then the inventory of supplies would be what we just saw on the water and sewer, as well as the amounts for public works and for parks. And so overall, those non-financial assets this year at 414.3 million and up from 377 million last year, again, with those significant capital projects during the year. So with net debt of 155.6 million, non-financial assets of 414 million, the overall accumulated surplus on a consolidated basis is now 258.6 million, and last year was 244.5 million. So again, an increase from the previous year, and that's what we'll see as the surplus for the year. The next page then is the consolidated statement of operations for the city. So again, showing the revenues, expenditures for the year, and then kind of the overall result. So the revenues were budgeted at 95.2 million. The actual revenues for 2025 were 100.7 million, so almost at 500,000 more, or 5 million more than budget. And the previous year, it was 101.4 million. So revenues did go down from the previous year, approximately 700,000 in total. So in terms of some of the significant changes in revenue, so the property tax line is the first one there, which is obviously the biggest revenue source. The budget was 46 million. The actual property tax revenues were 47.2, and the previous year that was 43.8. So they've gone up about 3.3 million between 2024 to 2025. There was no tax rate change. So that is all new development, new properties. And then, of course, you also get the benefit every year of just everybody's assessed values go up. So you're getting the increase in property tax revenue from that as well. The next item is the government transfers for operations. So budgeted at 20.3 million, actually at 21.5 million, and last year was 26.8 million. I'm going to scoot you right to that note because it's easier to show you. Note number 16, so the biggest portion of that is the municipal support grant that comes from the province. That's 20.7 million, budgeted at 20.2, and last year was 19.7. So that's the significant increase there, or significant number of that. The transit funding is about 560,000 both years. Fiona relief funds last year, about 1.3 million, coming from the province in terms of costs associated with cleanup, and only a small amount this year. And then the other and most significant change, as you can see, is last year you had received CMHC funding for the Rapid Housing Initiative of $5 million, and that had been spent last year. So that's really the significant change there. Yeah.
And so, okay, because I think there's another 5 million coming.
No,
That's already been received but not spent yet.
That's half. This is
Yeah.
this is the 5 million that went to the 470
Yes,
Malpeque
Malpeque
Road
Road.
project, a combination of the province and the city, along with federal funding.
Yes.
And I think the project for the 144 units are all prefab modulars.
Yes.
It's going to be about $60 million.
Yeah, yeah. The other $5 million that you're talking about there is still in deferred revenue. So on,
So it'll show up in the next,
yeah, so right here on note number 10, deferred revenue, Canada Mortgage and Housing Corporation, there's $5 million. You received 2.5 last year, another 2.5
Okay.
in that year, hadn't spent it before the end of March, so that's 5 million that you have as well.
That's under the half.
Yes,
Yeah, Housing
Yeah.
Accelerator Fund.
yes,
Yeah,
exactly.
that's
Yeah,
right.
yeah.
So has any housing accelerator fund money arrived?
Yes, the 5 million.
The 5
Yes,
million.
Okay, so that's-
Yeah, and you only spent like 20,000 or something of it, I think.
But there's still another 5 million to come then, because it was 10 million.
5.2 or 5.3?
Yes,
Yes,
yes.
okay.
It's $10.3 million
Yeah,
fund.
yeah,
It's a 10.3 million.
That's right, yeah, that's right. Okay, thank you.
okay. So we'll go back to page number 5 there, the consolidated statement of operations. So that government transfer for operations, as I said, down from 26.8 last year to 21.5. So it's that CMHC Rapid Housing Initiative of 5 million last year, and some additional funds last year for Fiona cleanup, which would have been from the province. Water and sewer, as we just saw, about $14 million in revenues for water and sewer. As we just saw, only a small increase there in revenues in total, about 100,000. Recreation revenues, down from 6,034,000 to 6,007,000. So this would include the city programs. It includes 3.8 million from Kerry, and from Eastlink Center, about 1.3 million. So the reason it's down is the Eastlink is down approximately 200,000 from the previous year. So we're showing it here because we are on a consolidated basis of revenues and expenses. Terry, did you have a question? Sorry.
Well, I'm just wondering why we only budgeted 4.3.
That is something that I have to follow up before tomorrow. I'm thinking it might be something in Kerry and Eastlink that might be off. I'm
Okay.
not positive yet.
Okay.
Yeah, but I will clarify that before tomorrow.
Thanks.
Next is licenses. So budget of 2.8 million, actual revenues of 3.6, and the previous year at 1.8. So these would be like mostly building permits. So obviously significant permits approved and development within the city. So that's an increase in revenues there. Then we have police protection services. So fairly similar, 2.4 last year, 2.3. So that would be amounts from court fines, tickets, and then, of course, there's government funding that police protection services receive from various levels of government. And then we have parking, which is down from 1.3 million to about 1.2, mostly to do with kind of DVA parking spaces that are down with obviously that location in construction at this point in time. And then miscellaneous revenue down from 994,000 to 547,000. Last year, just some extra funding from ACOA, as well as active transportation. And last year, there also was approximately 200,000 of a rebate from Workers' Compensation Board. So those are kind of higher amounts last year. And switch program, obviously going down with coming close to the end of the program. So those are monies that are the grant portion received from the Federation of Canadian Municipalities. Interest and others, so there was additional interest earned on having, as I said on that first page, of having money in your account for a portion of the year. There was interest that was earned on that. And then the net income from CADC, as I mentioned, is your 15% of profits for the year for CADC, so down a little bit from the previous year. The other item that I do have to clarify before tomorrow is the interest in other. I think some may have to go to those other areas. Yeah, yeah.
The other one, if you could look into it too, I just wonder why parking was also budgeted so low.
Sorry,
Okay,
which
one-
one, Terry?
Parking, we had 1.3 actual.
Yes.
Construction going on, EVA and.
I'll still come in at 1.2.
Yes, it was. Yeah, yeah. 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 I'll look at that one too, but, so yeah, I have to look at parking, rentals, miscellaneous, and kind of the interest and other, that budget, how that all's been allocated. Yeah.
Yeah, that'd be an interesting one, the 1.8.
Yes,
Yeah.
yeah. I think some of that's supposed to be in rentals and miscellaneous as well, so, and possibly even parking as well.
Okay.
But when you look on an overall basis, you still are over budget and revenues about a little over 5 million in total, so.
Yeah.
Yeah. So then the next information is the expenditures. So the budget was 105.5 million. The actual expenditures are 100.6 million, and last year they were 98 million. So they're up approximately 2.5 million in total. So the first line there, the amortization of tangible capital assets, from 12.4 million last year to 13.8 million this year, and that would again be a lot to do with the significant capital spending during the year. Development, heritage, and other, so that's down from 15.7 million last year to 11.8 this year. And that would all have to do with that 470 Malpeck Road in terms of your contribution of the 5 million towards that project. So you received revenues, that's in that government transfers, and then your amount or contribution to that project is included here in development, heritage, and other. Last year was 5 million. It also would include transit in that number, about 2.8, 2.9 million each year, and of course salaries. But that's the significant reduction there. Fiona, obviously down with last year having a higher amount of kind of cleanup costs, and this year a smaller amount. General government expenses at 9.1 last year, up to 9.3 million this year, and under the budget of 10.6 million. So those would be salaries, IT, insurance, professional fees. So those are, as I said, very consistent overall between the 2 years. The interest on the long-term debt, up from 3.4 million to 4.9 million. So that's, again, as I said, an additional $10 million that was borrowed during this year. And at the end of last year, there was an additional 49 million RBC loan that was advanced, was not for a full year, so this year we do have a full year of interest.
Okay.
Parks and Recreation, so that's up from 10 million in the previous year to 11.2 million this year. Again, this would include the city salaries of about 3.4 million, wages for Carrie and the Civic Center about 3 million, and of course Carrie and the Civic Center operational expenses as well. So wages up probably about 500,000 in total of that number, and then additional operating costs for Carrie and Civic Center also up approximately about 500,000 in total. Then we have protective services up from 17.9 to 19.3 million, so that's an increase of about 1.4 million. So that would be salaries for fire department and police department, and then of course operating expenses. So salaries being the biggest increase there in this fiscal year. Street maintenance and environment up from 16.1 to 17.3, so an increase there of about 1.2 million. And again, that would be increase in salaries. This also includes snow removal, which is up approximately about 500,000 from last year, and street cleaning and patching, which is also up from the previous year. The switch program, as I said, winding down in terms of the final costs there, so that would be for PACE in terms of administration costs, down from the previous year. Tourism accommodation levy, so the amounts paid out from that fund were about 2.3 million this year, and they were 2.2 million last year, so those are amounts that are paid to Discover Charlottetown, meeting and conventions, surf events, and various grants during the year. And then as we just saw, water and sewer had gone up from 8.9 to 9.5 million. Majority of that, as we just saw, was in repairs and maintenance, was additional costs.
Marie,
ahead.
Michelle, just, I know it's an in and out, so the tourist accommodation level we show it here is 2.2, and then we would, that lives where on the revenue side up there?
Yeah, so.
In which line?
Yeah, so under the.
Oh, I
tourism-
see, yes,
sorry,
no, yeah, thank you, no.
Yeah,
sorry, but-
2.4, yeah. So overall, the expenditures, as I said, did go up about $2.5 million for this year, as we saw amortization and interest being probably the two significant components there, and as well, kind of some increase in salary areas in some of the areas. So overall, the operating surplus for the year on a consolidated basis is about 100,000, where the previous year, that was about 3.3 million. As I said, the revenues went down about 700,000 and expenses went up about 2.5 million. So that is a significant kind of change there, affecting that surplus that you had last year to almost essentially break even basis this year. And then the other revenues and expenditures. So again, we have government transfers for capital this year at about 9.4 million. So that would be money from gas tax, Investing in Canada Infrastructure Program, a lot of that to do with Simmons would be the biggest portion of that. And last year, the significant numbers would also be in relation to Simmons in terms of investing in Canada Infrastructure. Last year, that was almost about $14 million of funding. Also was some significant amounts as well from gas tax used as well. The municipal capital expenditure grant, the 10% component that you get from the province, 4.9 million this year, about 4.2 million last year. Again, more in terms of capital. Yep, Terry,
If I
sorry.
can just interrupt again, Michelle,
Yep.
just back to that other line item. The breakdown they had, do you know how much was actually used in the gas tax portion of that?
In that 9.4 million, it's about 1.2 million, and 1.1 million of that was for the Victoria Park shoreline.
So a total of 2.6 million.
No, sorry, 1.2 in total.
Oh,
And
1.2
of that
total.
1.2, most of it was for Victoria Park shoreline.
Okay. Okay. So that's all the gas tax that was used in city
Yes.
government, was the 1.2?
Yes. Yeah.
Okay.
81,000 was for the water and sewer, and about 1.2 was for the city.
And we would have got 3.3.
You didn't actually get anything last year, unfortunately.
How come?
I'm not sure. Everybody was delayed. I think it was obviously because of the new kind of advance, starting at the 24-25 was the new of the 5-year. All municipalities were quite late in getting there, so you didn't actually receive anything. So you're using some of your past funds. And then I'm not sure if you've gotten, I'm sure you've gotten it by now, but.
We were supposed to get about 3.8. So it's still coming, it's just that.
Oh, it'll still come. Yes, exactly. Yeah.
Okay.
Yeah, yeah.
Okay, so 3.8, so 2.6, and we had 2.66 in water and utilities. So do we know how much is left that we haven't used, that's been accumulated?
Yeah, I'll bring you here to page number, oops, right here. So in note number 10, the Canada Community Building Fund,
Yep.
you had 2.8 million between water and sewer and the city. So as we just saw on the water and sewer, 2.6 of that is the water and sewer, and only about 200,000 is what's left for the city. But that's before your 24-25 allocation.
Right, 2.8,
Yeah,
okay. Okay, 'cause we were told there was none. So, thanks.
yeah. And then kind of the other revenues expenditures would be the pension, which is said is a positive number, and then a sick and post-employment benefit, the net kind of cost for the year of additional year of service. So as I said, you essentially a break even for the year in terms of the operating surplus. The other revenues expenses, 14 million this year, but a lot of that is to do with basically capital funding. So it's the operating surplus number that is the most important line there. I'll skip over a few pages here now, but so note number 6, the accounts receivable, as I said, was about 5.9 million. A lot of that to do with HST or CRA rebates for HST, about 2.2. Trade receivables about 3.7, which we just saw on water and sewer. 2.5 of that is for that outstanding amounts. The government funding receivable, the next note, about 10 million was outstanding. 3.4 of that is from ISIP, or Investing in Canada Infrastructure. 2.8 million from the province of Fiona relief, and then the municipal capital expenditure grant of about 2.7. Oh, I'm sorry. Sorry. Okay, so the government funding that was outstanding and owing to the city on a consolidated basis at the end of the year, 10 million. 3.4 was from ISIP, which a lot of that was relating to Simmons. Province of PEI Fiona relief, still about 2.8 million was outstanding at the end of March. And then the municipal capital expenditure grant, about 2.7 million outstanding from the province. Note number 8 is the CADC. As I said, you have a 15% ownership in that, and their net earnings for 2025 to the end of March was 1.1 million. And so your 15% share is 165,000 for this particular year. Last year, it was 204,000 in total. The city pension, overall for the city pension is on this particular page 18. So the plan assets, what's invested is 133.3 million. The obligation is 117.5 million. And then there's gains, unamortized gains or losses of about 6 million, leaving kind of a net amount of 9.7 million to a positive. So it is in good financial standing, the city pension plan at the end of the year, and up from the previous year. And that would be in terms of improved kind of investment returns during the year. That number is not reflected anywhere in the assets of the consolidated statement of the city because the city cannot access that for operational purposes. Yeah.
So, yeah, just go to the pension for just a minute.
Yep.
So just curious, the contributions relation to the withdrawals, do they?
Yeah, so
do-
2.4 million is what employees have contributed in the past year.
Yeah, and then-
2.4 is what the city contributed, and then overall, benefits paid out were about 5.3 million.
Okay.
So a little bit more was paid out.
Okay, and then, but you got to look at your investment return too.
Yes,
so, yeah.
yes, yeah. That's really what the increase is. 7.5 million is obviously there from investment returns.
Yeah.
So on a whole, the city is obviously, the pension plan is doing well, fully funded, yeah.
Chair, this is both, this is.
No, this is
it's
just the
the
city.
city pension,
Yeah,
yeah.
and then,
And the water, wastewater, utility pension is.
Fully
in-
funded as well.
Is in the black.
yeah,
But, so they're separate?
they are separate. So this page here is just only the city one.
Yeah.
So about a 9.7 million kind of overfunding. The next page here is the Water and Sewer Corporation. So, stop. A positive about, stop, 368,000. Not sure why it's going crazy there. Oops, get back to it here. There we go. So 368,000 is the water and sewer portion, which is a positive. Yeah. The next item I'll probably refer you to is just on note 13, the long-term debt. As I mentioned, overall, these numbers here would represent the total loan in the name of the city of Charlottetown. However, some has been apportioned or allocated to the water and sewer, as we just saw. So the first line there, as you can see, there is an additional $10 million in terms of the Royal Bank of Canada. So that was an additional borrowing during the year. The other new one is close to the bottom here, 1.6 million from the Federation of Canadian Municipalities, and that was for energy upgrades. So the total loans are 131.2 million, and last year it was 127 million. So again, with those two new loans from Royal Bank and from FCM, and then obviously making regular repayments during the year on all the loans. Right here, it shows next year, in the fiscal year that we're in now, you would pay about $7.2 million in principal on all of those loans combined together. And as you can see, they go up over the next number of years as obviously that's being repaid. Note number 14 on the contingencies and commitments. So there's obviously property tax relief provided to Confederation Center, Charlottetown Airport, Cary. So that totaled about $1.1 million last year, similar to the previous year. Legal matters, there's obviously various legal items, and there's been nothing accrued here in terms of any amounts for claims. Cary, obviously the city is responsible for 87% of the capital addition or replacement costs. And D is the lease commitment, which does relate to McAleer in terms of the space being rented there. E is the transit service, so obviously there's a contract with Trias. The amount paid to Trias in 2024 was $2.5 million. In the fiscal year 2025 was $2.589 million. And in F, the commitments, so about 7.3 million has been committed for the city for this next year for capital projects, 5.3 million for water and sewer projects. The other item that I'll refer you to here again is that accumulated surplus number. So 258.6 million was the consolidated number. And again, similar to as we saw in the water and sewer, 256 million is the investment in tangible capital assets, or kind of the infrastructure already invested. So the amount essentially that is the unrestricted portion is about 1.6 million. And as we just saw on the water and sewer utility, that's a significant number of that portion that's available for surplus. So as we just saw on the Water and Sewer Corporation, the surplus was actually 15 million. On a consolidated basis, we're down to about 1.6 million. So we're in a bit of a net debt situation overall on a consolidated basis for the city. But it has improved from the previous year where it was overall a deficit of about 2 million and to a positive number. So it's about obviously the borrowings and obviously significant capital projects and borrowings, relating to that. So at the end of the year, a lot of it has to do with borrowing on, line of credit and borrowing kind of for capital projects. Yeah. The other item that I'll refer you to is probably just this schedule again on the tangible capital assets for the city. So this is on page 30. So for the city of Charlottetown, all the major assets in terms of land, buildings, road infrastructure, vehicles, streets, sidewalks, storm sewers, that all cost $322 million at the beginning of the year. As I said, about $67 million was spent during the year. $34 million of that, as you can see, is under buildings. A lot of that is Simmons, of course. The road infrastructure was $13.7 million, and that was spent during the year. Motor vehicles at $4.6 million, so that was about $2.5 million for buses and some new vehicles for kind of public works, police, and others. Streets and sidewalks at about $2.8 million, and about $1 million in equipment. So $67 million in total was spent in capital projects during the year. And now the total of that investment for the city is $366 million. And every year, as I said, we do amortize all those assets. This year, about $9 million was the amortization for the year. And then the next page is the Water and Sewer Corporation, as we just saw, was about $201 million cost. And then we have included here as well Cary and Eastlink, which they had, very small additions during the year. So total on a consolidated basis, investment in all that infrastructure is over $602 million. Total investment, $76 million additional contribution of projects in this fiscal year, $76 million. And a net book value of about $409 million in total at the end of the year. The other item which I will refer you to here is on page 34, which is kind of an operating kind of disclosure by each kind of major area, as you can see. So general government, which all of the property taxes kind of allocated under there, does generate a significant, obviously, portion of the revenues for the city. The protective services, the revenues under that area is about $2.3 million, but the costs are about $19 million. So there's a net cost to the city of $17 million. Street maintenance and environment, parking revenues that are generated are about $1.2 million, but between salaries and operating costs, that's $17 million, so a net cost of $16 million. Parks and Recreation does generate about $6 million in revenues for the year. Salaries and operating costs, about $12 million, so there's a net cost of about $6.7 million. Development, heritage, and other does generate about $4.6 million in revenues in terms of the tourism accommodation levy, rentals, and other miscellaneous revenues. But there is a net cost of about $14.6 million in terms of salaries, operating costs, and the amount paid out of the levy. And then the water and sewer, this is on an elimination basis. So on itself, the water and sewer has revenues about 14.1 million. This excludes the amount that is the fire protection amount from the city of Charlottetown. So 1.3 million going from the city to the water and sewer. So just basically on its own, the Water and Sewer Corporation generated 14.1 million, had similar in terms of kind of expenses, so it basically is kind of a break even. And so you can see overall, that 96,000 that we're looking at in terms of an operational basis on a consolidated basis, 145,000 of that has been generated from water and sewer. And so there's a net deficit really on the city side on a consolidated basis. So that's a lot of information. Does anybody have
Yeah.
questions?
Just on your comment there on water and sewer, if I'm right, I believe this is probably my third budget or third audited statement. The water and sewer, and I know Councillor Bernard and Mayor Brown were around this table a longer time, and Chief has been around, and does water and sewer, and Richard, I guess, direct reformer, tend to kind of more or less break even? Has that been a fairly common operating result of our water and sewer department?
It's always the goal to operate, to make sure that whatever the expenses are for the utility, we match it with revenue. I mean, over the years, it's not always the case, but that's always the goal, to have them matched.
Thank you.
So, Michelle?
Yes.
Do you want to go, Counselor? Okay. Can you just go back to page 7? I just want to go back to the revenues, expenditures. This is the one that I think will cause me some concern when I looked at the government transfers for operations. Again, when it's noted in note 16, that 5 million that came from Rapid Housing Initiative, that greatly affected our bottom line, which was a surplus. Last year's surplus was 3,385,000.
No, it wouldn't have affected it at all because you have revenues in that government transfers for operations of 5 million, but under the development, heritage, and other, you also would have had the exact same $5 million. So it had absolutely no impact on the operating surplus at the end of the day.
Yeah, that's, okay, I'm trying to clarify that. So, government transfers for operations, note 16, actual was 2024 is 26.8
Yes.
million.
Yes.
Of that 26.8 million, 5 million was part of that 26, right?
Correct,
So when
yes.
then you add it down to the 101 million of total revenue, and mine is it from the total expenditures, you're saying that 5 million is not part of that?
No, the 5 million is in the government transfers for operations. So of the 26.8 million, there is 5 million revenue included there.
Yeah,
And under the development, heritage, and other expenditures of the 15.7 million, that same $5 million
million
of
is-
your contribution is there. So at the end of the day,
It's
the
an in
city
and out.
received money, the city paid money out and has no benefit
okay.
from
I
that.
just want to clarify
Yeah,
that, okay.
Yeah.
And if you look at our actual for our revenue minus expenditures for 2025, it's 96,000.
Yes.
Compared to the year before, it was 3.4, 3.3, 3.4
yeah.
million dollars.
Yes.
And I'm trying to find out, you know, if the 500,000 was an in and out, our, you know, our difference between last year and this year's surplus could be attributed to lower,
It's really in the expenditure category.
Okay.
And two probably significant items. So it's the amortization, as you can see, went up from 12.4.
which is depreciation,
Yeah,
correct?
Yeah, 12.4 to 13.8. So that's one of the significant portions there.
Right.
So that was an increase of about 1.4 million.
Right,
The other significant one would be the interest on the long-term debt. So that went up from 3.4 million to 4.9 million. So that's also an additional, essentially 1.5 million. So we're talking $3 million right there.
Right
on
there.
those two items.
Okay.
Between additional borrowing and additional depreciation.
okay.
Yeah,
Okay, so.
that's the significant change.
And that depreciation amortization is based on those big projects that we finished and completed. Simmons,
Simmons, yes, would be the
and I
biggest portion.
believe water and wastewater had some projects that were $1 million, $2 million value.
Yes,
Okay,
yes.
okay.
Yeah.
So going forward, does that amortization, again, just to clarify, it'll decrease because as we pay more down?
Yes, yes. In theory, if you don't do any other kind of major projects, that number will decrease over time. But you've been in a period of significant, steady kind of project growth. So that's why it's been growing quite a numbers. Like I think in the last few years, I remember it being at 9.5 million not that long ago, probably 3 or 4 years ago. So you've already, increased it about $4 or $5 million. So it'll likely stay around the 12, $13 million, I'm assuming, for the next number of years.
Right,
Yeah.
right. Michelle, the issue for me is that we do have some projects in the hopper, which will in effect have a lower streamline effect on our bottom line, correct?
Right, yeah. So if they're significant projects, and again, once they're completed, that depreciation or amortization would start and would have an impact in terms of additional expenditures, yeah.
Okay, okay.
I mean, sorry, the other item, and municipalities, are starting to look at this probably more thoroughly, is because you are in a period of significant, investment and growth, you are spending a lot in capital projects. And what some other municipalities are starting to look at is, does that amortization or depreciation match really what is the, corresponding kind of principal amount? And in this case, we've got a bit of a disconnect there. There's probably $3 or $4 million.
Right.
And so what some other municipalities are looking at is what is your policy for depreciation? And does that go in line with, matching up what your financial statements are going to be? So that might be something to consider in terms of, do you need to revisit some of those rates? As I said, they're fixed now because that is your policy.
Right.
But it doesn't mean that you can't consider that and look at that maybe being more in line with your debt and principal and really what is that amount going forward.
And that's what I've been questioning over the last couple of
Yeah.
years, is that our depreciation amortization is really squeezing what we can do
Yes.
as a community for
Yes.
projects that are important to neighborhoods and the community as a whole. I just want to end by saying, Mr. Chip, thank you very much. This was a great presentation. Michelle, as always, you give very clear explanation of what we're looking for. I just want to ask that Isaac or someone from the Department of Finance provide us what is our total assessed value. I'd like to know that. And the other question would be, how many customers did we add with our water and wastewater utility? Because that keeps growing. per
I would
year.
have that. I just didn't have it in my fingertips
And I
here.
appreciate the information, great information.
I just had one question, John.
But just on your point here that you were just talking about, I guess our depreciation schedule and the classification and the amounts and, where that's at. So I'm kind of hearing from you in so many words. I mean, you've been on the file now, for some time. You feel there's reason for us to take a second look at how we're doing that, and could you give the appropriate time, I guess, through CAO or whatever, give and whatever, maybe the finance committee some direction or your feedback on that, and
Yeah, for
perhaps.
sure, for sure. So right now, the city has like a tangible capital asset policy, which outlines, various assets, what depreciation rate would be. And as I said, it's not unheard of for
Yeah.
many municipalities to revisit that on an occasion and see if they match better with what really is the,
Yeah, when you obviously go through this sort of exercise, I have a better appreciation and sensitivity to, how it does affect, how it does affect, your numbers and your
your bottom
ability.
line. Yeah, it does.
Yeah, no,
It has a drastic
exactly.
impact.
Thank you. And thank you again, as Mayor Bransford, great job, great presentation. And Councilor Bernard has a question or comment?
Well, I just had one before my computer froze up. Michelle, I thought, yeah, I know, yeah. And if I heard you right, it sounded like there was still about $10 million to come back to the city from different government organizations from PARPA
Yes,
funding.
at
Is
the
that
end
correct?
of March, yes, 10 million,
Okay.
yeah,
So, okay, and that was at the, as of the end of March, so,
yes. And some of it still probably is outstanding at this point. I'm just going to find you the number here again if I can. So it was 10 million.
number 7, okay.
It was page number 15. So the biggest portion of it was ISIP, or Investing in Canada Infrastructure. That was for Simmons. That's been received. The province of PEI Fiona relief, that's still outstanding. That's about 2.8 million.
Okay, yeah, oh, I see, okay.
Yeah. And then the municipal capital expenditure grant, 2.7, a lot of that was received, but there's also probably a new claim that can be submitted now for capital projects. Basically, there'd be a lot would have been completed in the summer. So it's all about really being on top of those things, and obviously to your benefit to have that cash flow sooner than later, for many reasons.
Exactly.
Yeah.
No, that's why when you said it, I thought that number was high, and that's when it froze up. So anyway, okay.
So just on that number, I mean, it's a fairly significant number, the Fiona relief one, like 2.8. Does, like, what's reasonable, and I'm just asking, anybody in the room can answer it if they have a sense of it, like, what's a reasonable expectation to, in terms of receiving that from the province? Like, does it, would that come in a lump sum? Would it be staggered? Does anybody?
So I know that you have received some of it, and I think it's because it's different claims and different types of relief that they're providing, depending on whether it's water and sewer, the city, or parks, recreation, whatever it might be. So I think when the province gets it, they're kind of focusing on a certain claim and then kind of dealing with it. But I know there's quite a number of them that are standing, but maybe, Brad, you have more information.
Yeah, we are currently working at submitting those claims also, so it's a work in progress, left over from the time. So each individual claim is assessed and submitted. So there's quite a bit of work still to do there.
Michelle, as usual, excellent job. Thank you very much.
Thank you.
Appreciate you coming in.
No problem.
Okay, with that, Mayor Brown?
Again, I can't let
Red light.
Michelle away because, Michelle, the consolidated statements that we just looked at, right? $96,000.
Yeah.
Water and wastewater was at 1.2. Now, Councillor Bernard might have asked this question, but that 96,000 is just a city portion,
No,
correct? It is.
that's combined.
Oh,
Yeah.
okay.
So the last items I went over there with you did show that 96,000, 145,000 of it is for the water and sewer, excluding the fire protection amount, because that's really just moving from one hand to the other. So on a consolidated basis, you made about 100,000, 145 of that was from the water and sewer. So really, on the city basis, you had a deficit of, we'll say, about 50,000.
Okay.
Yeah.
Okay.
Yeah.
Yeah. And again, these are just, I think viewers that are watching live stream, I'm making sure that, I want to ensure that we have numbers that relate to the corporation,
Yeah.
water and wastewater utility, relate to city corporation, and then the consolidated numbers. But great on the water and wastewater and how they holding the line and keeping our books in order. So kudos to the director, Richard McEwen, and Josh McGinnis as manager, and the staff, our financial staff that are working on the numbers. Thank you again.
And
Thank-
probably, Your Worship, the increase of CPI helps us keep on that the projection, as opposed to every 5 years have to raise it 5% or 10% or 50%.
We went through that.
Yeah, yeah. So the 3%, the CPI has been working.
Okay, Michelle, you good?
I'm good.
All right, thank you again, and we'll go on to rest of our agenda, which is, I believe, short.
Mr.
Number
Chair.
7 is new business.
Did you want to ask if the deputy has,
Okay, excuse me, Deputy, and
Yes.
Julie?
Julie, Councillor McCabe on the line. Any questions, comments?
I don't think so. I think that all the questions were flushed out. So thanks especially for His Worship and Councilor Bernard for really flushing out those questions. So I'm good. Thank you.
All right, and Councillor McCabe, haven't heard, so I'm trusting it's good? Okay, all right, so new business? Anything on new business?
None.
Seeing none. And number 8, adjournment. Motion,
Move.
Mayor Brown,
Thank you
second of
very
Councillor
much.
Zhang. Thank you.
Thank you, Commissioner.
Thank you.